if I lay down and I play dead and I stay dead, maybe you'll get sick of being the monster out of my head, under my bed. Think you're something out of my nightmares, standing right there. But if I lay down and
Kenzo's Gold Crypto Investing, and you can see we had our inflation data come out today as the Fed talks next week, and stocks plunge as inflation soars at fastest pace in 4 decades, CNBC, right? And now they're hawking gold up there. Stocks on Friday, after new government data showed inflation in May jumped 8.6%. And as you know, in the last report last month from April, it was slightly down from the month before from year over year. So they thought maybe that was the start of inflation declining, but it was just a pause, and inflation has much, much higher to go, right? 8.6% from a year ago, the steepest increase in consumer prices since 1981 when Paul Volcker rose interest rates and the Fed benchmark to over 20%, right? The S&P fell 2.3% uh, to 39.26 as of 10:53 a.m. Eastern. The Dow Jones fell 2%, and the tech-heavy Nasdaq 3% as tech sector and EV markets get hammered with high inflation. In absence of major upswing, God, I hate how they got so much advertising on here. Major upswing on Friday. Major U.S. benchmarks are headed for their eighth week of losses in the past 9 weeks. The jump in consumer prices, a broad basket of goods and services, was due mainly to price increases for fuel, food, and housing, everything that you need to use to live. And as old Vincenzo's been saying, we're going into an inflationary depression. 2 years ago, when we started printing money, you could see this coming from a mile away, right? And now you're having skyrocketing consumer goods, right? And that's the worst kind of inflation to have. It's even worse than asset inflation, because in asset inflation, it only hurts the people that don't own the assets, but the people that own the assets, houses, real estate, stocks, commodities, they make money with asset inflation. But consumer inflation, there is no making money in it. It hurts everybody, because when you buy food, you use water, drive your car, buy a house, whatever you're using to spend money on that you need to live. Not as the things that you need to live are skyrocketing in consumer inflation, not your things that you want or would like to have, but the things you need: food, water, energy, oil. You need that to live. Without it, you die. So everybody gets hit, and hit hard, especially the middle class and poor. All right. The jump in consumer prices, a broad basket of goods and services, was due mainly to price increases in food, fuel, and housing. Right. Energy, housing, and food. Everything we need to live, the worst possible thing. And you can see the evil white man right there, Jerome Powell. I just like calling him the evil white man because he's white. If he was black, I would call him the evil black man. But he's a head criminal henchman for the criminal gangster cartel that had infiltrated the United States Federal Reserve, uh, the United States government, Federal Reserve, and the banking systems, as he's the head henchman, as he is the Fed chairman. So he is the head henchman for the criminal gangsters that have infiltrated the Federal Reserve, and he is their puppet master that comes out and speaks to the docile and uneducated audience, right? This report does influence the outlook for monetary policy in September and beyond. Bill Adams, chief economic of Comerica Bank, said in an email to clients, the persistence of high inflation in May bolsters the argument for additional 0.5% point rate hikes after July, and weaken the argument for a pause in hikes in September, right? Let's put this on so we don't get any of that. The risk is that such move could cause a recession, which we're going to have much worse than a recession. We're having an inflationary depression, right? Because what's going to end up happening here in another 3 to 6 months is that at some point the Fed's going to pivot and the Fed's going to go back to quantitative easing, and it's going to be QE5 this time, right? And you're going to have skyrocketing debt, and then you're going to have right now you're having the U.S. dollar as the Fed tightens. The U.S. dollar is getting stronger, which, as bad as inflation is, believe it or not, it could be 100 times worse if the dollar was falling. But as soon as the Fed pivots, the dollar is going to crash, and then commodities are going to skyrocket, consumer prices are going to skyrocket, and even stocks could start to go back up in risk assets. Some of them as the Fed prints money, right? A big factor in inflation is higher gasoline prices. Well, when you have a war on oil, and you say, well, Vincenzo, what do you mean a war on oil? Where you have an administration that is anti-oil, anti-fossil fuels, which is putting added pressure onto already skyrocketing inflation prices after we shut the world economy down and printed money so everybody could consume while we were producing less. You can see the United States hit $4.99 a gallon for regular unleaded. And in California, in a communist state in California, I would never recommend anybody lives in that hellhole. It's $6.60 something, $6.42 according to AAA in communist California. They're blaming the crude oil prices are up roughly 60% for the year. Much of the jump is due to Russian. And see, this is all fake news. This whole area is fake news. A big factor in inflation, blah, 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 household pressure. Crude oil prices are up nearly 60%. Much of the jump is due to Russia invasion of Ukraine. Now, here's how easy that is to go disprove. Go to the gold market and go to oil. Let's find oil, right? Where's our oil at? There's our oil price. And the war in Ukraine started in what, January? So where's January at? Let's go back a little bit. I believe the war in Ukraine started right in here. The oil was about $95 a barrel. So they're saying it's because of Ukraine, but Ukraine started about right here, and we're up 31% since then. But let's go look at the previous. Let's go start at 2020 in January, right? We'll start January 1st, 2020. Where's January 1st? There you go. January 1st. Oil was already up before Ukraine, 100%. So oil was skyrocketed 100% before this little bit of the move took place. It just added insult to injury, right? This has nothing to do with why gas is going up because of the Russia Ukraine. It was already up well over 100%, and this is just adding insult to injury, along with horrible monetary policy and fossil fuel policy by Joe Biden, right? But you can see with that, the dollar skyrocketed as we would expect as inflation jumps, which means the Fed's going to tighten more. But you can see now what we're looking at, you can see we hit this uh, upper resistance, or getting near this upper resistance after we bought on the support. Oh, I deleted it. It's supposed to say support right there. After we bought the support, right? So now what you might see is a consolidation. Something like this. You had this big pump. Now you might consolidate right here for a little bit before your next leg up, right? At some point, this is more probably going to break up, but then eventually you're going to have a big retracement. But I think the oil is going to go much higher. Is it going to have a correction in between now and then? Possibly. We're going to keep an eye on that. But you can see with inflation numbers and the dollar, if we go to the stock market's getting hammered again. The Dow Jones, 654. The NASDAQ, 378. The SPY, Standard and Poor's, 2%. The Russell 2000, which is a small cap U.S. Company, is getting hammered, right? But if we go to gold, gold's finally decoupling a little bit from the stock market as it's been trading relatively close to the stock market. But today the stocks are down big because of inflation news. But today gold is responding on inflation news, up 1.5%. Silver, 1.15%. I gave you them videos yesterday. I told you I upped my position in Fortuna Silver, right? I have B2 Gold. I added to AEM down here. AEM's up 5% today. B2 Gold is up 5.82%. Fortuna Silver is up 8%, right? Some of my other ones that I own, Pan America Silver, I own pretty good amount, 6%. GPL, I'm getting hammered on, but it's up 2%. And Kinross, I own pretty good amount of that. It's up 5.21%, right? So the gold stocks are up today. They haven't been doing good recently. If we take a look at the gold portfolio, it's been It's been a rough stretch, right? It's been a rough stretch in our gold portfolio. But you can see we're up $400 today as the rest of the market's in turmoil. Our 3-year running building slowly but surely of our gold stocks that we do not sell, even when we're up big and fear correction. And in hindsight, it would be better off to sell and buy back in. You just never know because once gold goes, it doesn't always play the trend where it gives it all back. And the one time it don't give it all back is probably the time you're going to jump out to try to reposition. And by then, you're going to be buying it at a much higher level. So we're just going to keep adding to these positions. As you can see, AEM, we have 20 shares. Fortuna Silver, we have 250 shares. We were going to short GameStop and didn't do it. Kinross, we own 300 shares. We're shorting a little natural gas right there. Euro Pacific, we own 127 shares, and then a European International Dividend is paying stock. We own 39 shares. And then in our other contributions, we have 433 shares of B2 Gold. We have 8,000 shares of GPL that we're just sitting and waiting for the next 10 years for that to pay off. Pan America Silver, we own 38 shares, right? And Roscon Gold, we own 562 as a speculative stock that I think one day will do good. And then we own another 102 shares of our Europac Gold, right? So we're stacking on shares and we're stacking and stacking and stacking on shares because we believe, and I believe one day gold is going to pay off and pay off big time. And I think it's in the near future, as if you look at the gold chart, you can see we've been in this big consolidation since, well, that was when it really, we were way in the money. We were up about 4 grand right there in a month's time from its low, and now it's consolidated down, right? And it's been consolidating ever since August of 2020. But I do believe we're going to be hitting some of these upper targets in the next year or two. It's been steadily going up, but it's got to break out of this consolidation. Let's get that off there. It's not letting me click. I got that in green. You can't see the price, but I do believe you're going to be hitting these upper targets as the time goes on. You got a target up here, which is the old high at this fib circle at 20,019, and then I believe after you break that, you're going to come even higher to the next level up $2,200, right? I do think eventually we're getting up there, and I think when it happens, it's going to happen fast. Yes, you could say this looks like a double top, but if you look at the much bigger macro picture, to me, this is just trying to break through with a consolidation off the old high, just like Bitcoin did a couple of years ago. When you reach your old high, it takes a minute and you get a lot of volatility, but as soon as this breaks, I believe you're going to get some kind of a targeted move like this from the bottom of the cup and handle to the top to the point of a breakout. And it's not like Bitcoin where it happens in a month. This is going to be a steady couple year bull market, but I do believe eventually, that's why we do have that up there, but it's so hard to see with that color. I do believe eventually we will hit this target and move out into the future somewhere, right? Up there at $3,500. And I think gold has a long way to go up. Could it correct in the short term down to 1,600? Yes. Do I think it's going there? No. But will I accumulate massive amounts more in my mining shares? Absolutely, right? So that's what it's looking like there with gold. Silver is a much more sporadic because it's used in industry, but I do believe eventually silver is going to break up, and I have much, much higher targets up there of $28, 62, and 94 as the years go on because I have this beautiful silver chart that I made out for you guys, and I'm going to go over this again. You can see I made a couple members only videos on this a while back, and I'm going to have to get back into this and update this to give you guys a status of where we're at now. But you can see I made a beautiful silver chart uh, that I haven't been paying too much attention to because you guys all like the coins, but I'm getting more and more requests now for the gold and silver. So we're going to start bringing this up. But you can see we've had major support and resistances, right? $1.31 back in 1972. And then we ran up to a high in 1980 of $49, and in 1992 when they manipulated the price down 99% and went to $3, right? And it stood there until we had the massive pump in the mid 2000s, right, with the inflation. But you can see now we're hitting that uptrend again. And I believe when we break up out of this, which I believe is an ascending triangle, I believe you got a $62 to $94 price of silver target in the next 2 to 5 years. And that's why I'm owning companies like Pan America Silver and Fortuna Silver Mines, right? Because I believe those are great companies looking at their future earnings, their current earnings, and what they got going on. And I believe lots of money are going to be made in B2 Gold, Fortuna Silver, right? uh, AEM, Pan America Silver, and Kinross Gold, I believe are all phenomenal gold companies that have proven track records and have great future outlooks. And I think they're going to be 5 or 10 baggers, right? You just have to have time. You can't get distracted when the gold market goes down, down, sideways, pump, pump, down, sideways. And it just sits in a range. That's your time to accumulate every time it dumps. That's why yesterday on a 5% dump, I added to the position, right? Every time we have a sizable dump, I add to the position. And now going forward, each week on my paycheck, I'm going to be distributing $500 into that account every week, adding to shares. One week I'll add, like I added 500 in the AEM, right? This week. Next week, the 500 might go to Pan America Silver or Kinross. We're going to diversify where we add those shares in, and we're going to ride it, right? And we're going to keep accumulating and keep stacking our gold stocks. If you look at the crypto, as I feared this morning, crypto on the inflation news did dump. And look where we came down to on our Vincenzo watch that I introduced yesterday for our first Vincenzo watch in a while. We are down at that white support box. And as you do know, this white support zone down here has been a major volume area with our volume indicator. And that's why we had that watch yesterday when the price was up there. And now you got to watch to see if it can hold here and try to pump back up, or if this is the time it's going to leak all the way down and come retest a local bottom at 27,000, or come all the way down to that wick bottom, because eventually we got to come back down to that wick bottom at 24,000. Could this be the time it does it? It could be. And we're going to keep an eye on that and keep paying attention for that. Like, subscribe, and share. Peace and love. Peace and love.